and then, okay, and then I've requested him to join, but he's not going to. And I want to meeting details. I want to share my content, okay. Just quite a bit, very slow, okay, as you can see. There we go. Okay, now we can work. Let's see, there it goes. Okay, people, I asked you to do the depreciation for this year. Did I do? Was that you were supposed to do that? Am I right? Okay, right now, which means you have to be able to calculate the depreciation on the vehicles for this year and the depreciation on the equipment for this year. So let's do this here at the bottom. I'm going to do this here. Just move. For both of these, now why doesn't it want to move? Move. Doesn't want to. What is, okay, let's do it here at the bottom. Okay. I'm going to do this over here. You can take this away. We're not going to use that. Okay. For the vehicles, the depreciation on the vehicles, we know we're going to do this in 2 steps. Why? Because we have old and we have new. I want to write this a little bit bigger so you can see. For both of these, for equipment and for vehicles, we had old and new. So the old vehicles, where will I find the old vehicles? Inside my note. What was the cost price of the old vehicles? 460,000. Can you see that? It's already there because this is the end of last year, which is our old stuff. So the old vehicles is 460,000. What is the depreciation rate that is given? It's 20% per year on the cost price times 20%, and that is going to give me my depreciation on the old vehicles, 92,000. Are you fine with that? On the new vehicles, now we must look for the new vehicle. Where will we find the new vehicle? Yeah. The new vehicle is 350,000. The addition is the new vehicle. 350,000. When did we get that new vehicle? On the 1st of November. So we can only calculate depreciation from the 1st of November. So let's go there. The new vehicle was, where did I write now? 350,000. Also times 20%. But now not for the whole year, for November, December, April, May, and June. We also get 8 months for 8 of the 12 months. Let's do that. 350,000 times 20, divide by 12 times 8. Is it 8 months? Just November, December. Yes, it is 8 months. And is 350,000, am I right? Okay. Do you also get an amount with cents? Yes. So the amount on your calculator is 46666,67. Is that right? Remember, there's no space for cents in a statement. Have a look here. There's no place for cents. Can you see that? So that means you will have to approximate to 46667 to the nearest 1 rand. Are you fine with this? So what is your total depreciation on vehicles? It's going to be the 92,000 plus the 46667. That gives you 13866. Why isn't what is 13138? Why doesn't it want to write there? Let's write it here at the bottom. Maybe it's because there's a I think 138,667. Are you fine with that? So that is the amount I'm going to write inside my note. Depreciation for the year in brackets. 13866. Yes. Yes. Can you put it on the table over there? Thank you so much. Just put something on top of it. This pink file will be fine. Eliza, thank you. Are you all right with this, people? Are you fine? Now we must do the same with the equipment. For equipment, we also have old and new, remember, for equipment. So we're going to do exactly the same type of calculation. Equipment, we have old and we have new. Where do we find the old? We go to our note and check there what is the old equipment. The old equipment was 65,000. What's the new equipment? 60,000. Can you see this? It's in your note. Are you fine with this, grade 10s? Amy Jane, are you fine? So, okay, let's start with the 65. Remember, all I'm doing so far, I'm just rewriting 65 and the other one was 60, is it right? Are you fine? Now, what is the depreciation? What do they tell us about this depreciation? It's 10% per year on the diminished balance. Diminished balance means take the balance and minus first. We only can use diminished balance for our old equipment because the new equipment doesn't have any depreciation yet. So I'm going to take the old equipment, the 65 minus the 62. And as soon as I have that, I'm going to put that in brackets so you can see. And then I'm going to calculate it's 10% for the year. And that gives me 3,300. Is that right? Are you fine with this, people? The new equipment, when did we get the new equipment? We have to tell you on the 1st of March. So for the new equipment, which is also diminished balance, but there's nothing to minus yet because this is the first time we're going to write off depreciation times 10%, 10% not. And then we bought this on the 1st of March, April, May and June, 4 months, yes.
Sorry. Ek het gesê ek kan sy goed gebruik.
Okay.
Ek gaan weer vir 'n foto stuur van die skerm.
Okay.
Of my besluit of ons enige gebruik of ons dit self kan opslaan.
Okay.
Dit is redelik ek het net met praat so 'n bietjie by wat doen dit hier. Maar ons kan sy laptop gebruik. So
Nee, nog nie.
die helfte van die probleme is al klaar gesorg. Dat hy ons sy laptop kan gebruik. Maar die skerm is spesiaal.
Okay.
Maar ons kan dan net al sy goed gebruik.
Okay. Dankie. Okay, times 3. So we bought in March, April, May and June for 4 of the 12 months. Let's calculate that. So it's 60,000 times 10% divided by 12 times 4 gives me 2,000. So what is the total depreciation? It's going to be the 300 on the old equipment plus the 2,000 on the new equipment, 2,300. You should be able to do calculation of depreciation because we've been practicing that. Can you see we're still using the same adjustments, just looking at it from the balance sheet perspective. Are you all right with this? So what was the depreciation on equipment for this year? We're going to write this in 2,300. Obviously, remember, whatever you have here, you're going to add and put in the total column. Now we get to the carrying value of this year. Now you have to listen to me. What happened? You always start with what you had at the beginning of this year. So for land and buildings, we had that amount at the beginning of this year. Plus or minus, oops, let me just insert again. Plus or minus anything that happened this year. So plus or minus anything that goes there. We'll tell you what is the carrying value at the end of this year. So the 1,140,000 plus the 210. At the end of this year, the carrying value is 1,350. All I'm doing, I will highlight the amounts as well. I'll start with what we set at the end of last year, plus or minus whatever happened this year equals this amount. Are you all right with this? Now let's do vehicles. Vehicles we said started end of last year, beginning of this year is exactly the same thing. Started with 175. We bought a new vehicle of 350,000. We had to write off depreciation 138,667. So what will my answer be? I'm going to do the calculation. I'm going to say 175,000 plus the 350 minus the 138,667 gives me my new carrying value 3,386,333. Are you fine with this? And I do the same with equipment. For equipment, let's make that green. I have 3,000 at the start plus the 60,000 minus the 2,300 is going to give me this answer. Let's do that. So it's 63 minus 2,300 gives me 60,700. Are you fine? You physically do the calculation. It's all you have to do. Are you okay? Right. Now we get, this is the most difficult of the notes. This one. The others are straightforward. Now let's go to this one. Now we have to look at what is the new cost price. What is cost price? Cost price is whatever your vehicle, the old vehicles, plus the cost price of the new vehicle. Your old buildings plus the cost price of the new buildings. What was the cost price of your old building? 114. There's the cost price of the old building. Maybe I must, what should I do? I'll make that in red so you can see. What, did you get any new building this year? Yes, for 210,000 Rand. That's the new building. So what is my cost price in total? The cost price of the old plus the cost price of the new will give me the cost price at the end of the year. I'm going to make that in red and a little bit bigger. Do you understand how I got to that? Are you fine? Now let's do the same with vehicles. So I'm going to make that also in red. The cost price of the old vehicles, the 460, plus the cost price of the new vehicle will tell me what is the cost price of my vehicles in total. Do you understand that, people? Are you fine with that? So let's do that. Make this also red so you can see. So the 460 plus the 350 gives me 810,000. Are you okay with that? Are you fine? Equipment, the same story. The cost price of my old equipment plus the cost price of the new equipment is going to give me the cost price at the end of the year. 18, make this also red. So 65 and 60 gives me 125,000. Are you okay with that? Are you fine? I'm just adding the cost price. Are you all right with that? Now depreciation, we do the same. There was no depreciation, so there will also be no depreciation there. What was the previous depreciation? Let's make that now another color. Let's make that purple. The previous depreciation was 285. This year's depreciation is 138,667. So what will the total depreciation be? What do you think? Add the two. The 285,000 plus the 138,667 gives me in brackets 423,667. Are you fine with that? Can you now do the same with equipment, please? You calculate the depreciation at the end of this year. So it's the 62 plus the 2,300 gives me 64,300. Is that right? Okay. Now let's see. You know that inside this note, there's actually a built-in verification. Verification means somewhere that you can check your amounts. Now let's have a look. What do you think is the built-in verification? You know that carrying value is cost price minus accumulated depreciation. This is the cost price, no accumulated depreciation, so the carrying value is the same. Cost price of 810 minus that accumulated depreciation should give you that amount. Check and see if it's right. To verify amount means that you can check your answer. Is your amount correct? That's what verification means. We can verify these three amounts. I'm going to make them bigger still. Those three amounts you can verify by doing what? By checking to see if you take the cost price at the end of this year. This is the cost price at the end of this year minus the depreciation at the end of this year must give you that amount. Cost price at the end of this year minus the depreciation should give you that amount. Check and see if you can get it. You do the same on this side. See if you can get that. So the 810,000 minus 423,667, 38633, and the 125,000 minus 64,300, 60,000. So can you see this note has a built-in verification for you? Verification means checking your amounts. Are you all right with this? Is there anyone who has a problem with this note? Because this note is in your project. I'm handing the project out for you on Friday. You bring it back on Tuesday. Must be, and some of you didn't do too well in the other project, so you really need to do well in this one. Is there anyone here that has a problem? Anyone with this note? Yes? Again, how to check the answer? You know that carrying value is cost price minus depreciation. So the cost price minus the depreciation should give you the carrying value. Cost price minus the depreciation should give you that carrying value. Cost price 125 minus the depreciation should give you the carrying value, because carrying value is cost price minus depreciation. Are you fine? Okay. Done with this note. We can go to the next note. The note for inventories. Now I just need to move mine a little bit. So inventories. And I need to, what did I do here? Right. Example exercise. Right. First of all, inventories consist out of two things: trading inventory and consumable stores on hand. They have nothing else. Are you all right with that? Now, what's the example exercise? They give you, remember, pre-adjustment trial balance means before any adjustments were done. I tell you that I just need to get this additional information, right? Additional information number one, you will recognize these adjustments because we've done this before. A debtor returned unwanted goods, 3,600 Rand. This must still be recorded. The business sells all stock at a profit margin of 20% on cost. So he's bringing back. So we know that we're going to add to the trading inventory. We know that. Are you fine? What are we going to add? The cost price, because the goods that is returned, I'm going to write in red. And the goods returned will be put back on the shelf. You know that, isn't that true? So what are we going to do? Our calculation is going to be 3,600 times 100 divide by 120. See, there's a margin there. Are you all right with that? So what is the cost price of the goods that is returned? That gives you 3,000 Rand. So trading inventory, so according to our books at this stage, trading inventory is supposed to be 39,500. Are you fine with this? So that is what we have on our system. That is not what we have in our, really, we must still check that. Are you all right with this, people? Okay. Next adjustment. The owner took stationery for own use. This is his one. The accountant did not know how to record this and therefore ignored this information. So it's a really stupid accountant. If the owner takes stationery, then the stationery is going to decrease with 500 Rand. Obviously, drawings is going to increase, but I'm not busy with drawings at this stage. Do you recognize these transactions, the adjustments? We're just looking at it from the balance sheet perspective. Are you fine with this? The next one. Stock on hand according to the physical stock take on 30 June. Trading inventory, packing material. So this is how much stock you really have. So what will you do with this? That information, that 38520, is how much trading inventory you really have. And that goes in, I must write bigger. That must go inside your note. How much you really have. Not what your account tells you have, what you've counted. That is your trading inventory. That is the true inventory, and in your balance sheet, you must show the value of your true inventory, not your head in the cloud inventory, the one that you've counted. Are you fine with that? Okay. Then consumable stores on hand. Now this must be given as one amount. Now we must check what they tell us. They tell us that we have packing material on hand of 1580. That's what we really have. So that is going to form part of consumable stores on hand. Where's my note here? So far I can have, I'm going to write bigger, 1580. That's the packing material. But we don't know how much stationery we have. We must still add the stationery so we can know how much our consumable stores on hand in total is. Do you understand that? What do they tell us about stationery? Stationery used during the year is 14,125 Rand. Now look here. This is what we bought. That is what the owner took, remember? And what did we use? Minus 14125. Can we now calculate what is left of the stationery? All I need to do is I'm going to take the opening balance minus what the owner took, and that stupid accountant didn't know what to do with it, minus what we've used. So what is the stationery left over? Stationery left at the end of the year. If I do that calculation, 625, and that is our consumable stores. What is left at the end of the year? Do you understand this, Dolphin? Is there anyone who does not understand? Anyone? So what will I do? Inside my little note, we just realized, we've just calculated that we have stationery of 625. So what is the total consumable stores on hand? 2205. What is the total inventories on hand? I'm going to add 40,725. Same adjustment that we've done previously, just from the balance sheet perspective. Are you fine with this? Anybody a problem? Anyone? Are you okay? Are you fine? Sure? Okay. Yes. Packing material, there the amount is there. There, that's the packing material. The packing material that we still have, they told us, was 1,580 Rands worth of packing material. So there is it. That's the packing material, and this is the stationery. Are you okay? Sure? Okay. Are you okay, all of you, with this? Are you okay, people? Okay, right. Next adjustment is the one for trade and other debtors. First, let's see. You know that debtors are anybody that owes us money. You know that. Anybody that owes us money. Now let's figure out first what it is. Trade debtors is a fancy word for debtors control. So trade debtors is basically the balance in your debtors control account. Are you fine? Trade debtors is just a fancy word for debtors control. That's all. It's not a new concept, it's just a new term. So trade debtors is debtors control. Are you okay with that? Of that, people? Then the next thing that somebody owes us, you know that if you when you want to apply for a telecom line, for example, or you want electricity installed in your building, or you need water supply in your building, you have to pay a deposit. If you rent the building, you must pay a deposit. Now that deposits that we pay for whatever reason is still our money. At the moment, that money is just in the account of the municipality, in the account of your landlord. But as soon as you give up, you're not going to rent that premises anymore, you want your deposit back. If you are not going to use electricity or water anymore, the municipality must pay you your deposit back. So any deposit that we've paid, telephone, water, electricity, rent, that is money that whoever we paid that deposit to must give you back. Are you fine with that? So that's money they owe us. So a deposit that we paid forms part of the note for trade and other debtors. Then you know accrued income is income that we still have to receive. Somebody owes us the money. So accrued income forms part of trade and other debtors. And prepaid expenses, insurance and advertising, something you've paid now already for next year. So whatever you paid, those people owe you. If you paid insurance, the insurance company owes you cover for whatever period you paid. So these are if I were you, I'd go and study this. I will make sure that I know that trade debtors, which is debtors control, deposit that we pay, accrued income, prepaid expenses, these are your trade and other debtors. Because next year we're going to add one, and in grade 12 we add another one. So if you know these four now, then you know for grade 12 you already know 2/3 of what you're supposed to know. Right? Are you fine with this? So obviously now we will have to do adjustments regarding debtors, an income that we must still receive, an expense we've paid in advance. So obviously, an income that we still have to receive will most probably be rent on the fixed interest on the fixed deposit. A prepaid expense or will probably be insurance or advertising, because those normally are your prepaid expenses. So let's have a look here. What is the adjustments? There's the adjustments. First of all, they tell us that debtors control, can you see that we give you the amount for the deposit of water and electricity? So that one is easy. You just need to rewrite it inside your note. Additional information, the same one, the debtor returns unwanted goods, 3,600 Rand. This must still be recorded. Remember, it's the same one we've just done. Now we're just looking at this from this perspective for debtors. If the debtor returns, he's not going to pay for it. You know that already. So next to debtors control, we're going to have minus the 3,600, because if he returns, we're not paying. Can you, for homework, please do these adjustments? Just plus and minus in here. Those adjustments. If you can do those, and I'm not done yet, then the exercise for the one that says trade and other creditors, can you please do those adjustments as well? So you must do the adjustments for trade and other debtors and trade and other creditors, because those are all adjustments we've done before. We're just looking at from the balance sheet perspective. It's on the last page, the creditors. Okay, you may go. Goodbye. We need to finish this on Wednesday, because Friday I want to hand out your project, so we must be done by that time. Now, do you think that my friend would... Let me say leave.